Now, let's embark upon a tour of this exciting region from the comfort of the conference room here. First up, we travel to Misima Island, as we saw on the southeast of PNG. Would you please welcome the Managing Director of Kingston Resources, Andrew Corbett.
Hey, Andrew. How are you? Thanks for your time, everyone, and thanks, Patrick, for the great introduction into PNG and Misima, particularly in the favourable mentions there. So I'm going to talk to you today about Kingston as an introduction story because we are a new company, and obviously get into our core project, our flagship project today, which is Misima. As a background, I am a mining engineer, so I will do my best on the exploration geology. I'll talk about the history of Misima and why we're excited to be involved in the project, but also involved in PNG. Misima is an island location, as you've already heard, and there's 15,000 residents there, and for 14 years they had a world-class gold project in operation, and we intend to bring that project back into operation as soon as we can. It's going to be an exploration journey and then move into a development story, but I'll talk you through that today. Kingston, as a quick background, we've been going for less than 2 years. We've started in mid-16 as a new management team with the agenda of building a mining company, and I'll talk you through our assets where we are today on that front. So there we go. So as I said, where is Misima? I'll start there. You can see it's island out here. We like being on the islands in PNG. We think it's a very favourable location. And as I said, there's 15,000 people here, highly supportive local landowners. And I'll talk you through some examples of the benefits we're all seeing from that today already. We've only been on the island for 6 months. So how did we become the controllers or the owners of the Misima Gold Project? Quite simply, we took over a Canadian listed company called WCB Resources in November last year. So that was the 20th of November. We commenced work in December. We've already found what we think is a new prospect area in January, and the drill rig arrived just this month. So we're not messing around to get this project moving along. Where are we today? We've got 2.8 million ounces. We think Misima endowment is over 7 million ounces. It's produced 4 million ounces of gold already. We're currently sitting here with 2.8 in JORC resource. We have an exploration target of 300 to 800,000 ounces, which is a down dip extensions to the current resource. On top of that, we've got multiple exploration targets, which I'll talk through. Misima produced, like I said, 4 million ounces at a cash cost of US $218 an ounce for 14 years. So a very profitable project for Placer Dome. Placer was later taken over by Barrick. Barrick had the project and rehabilitated the project into closure. We're the first company to be exploring on Misima for 15 years for gold. We have an earn-in with our partners on Misima. We'll be at 70% of this project by July, August this year. So the earn-in was a $9 million earn-in. We've got less than $1.5 million to spend on that. Our partner is Pan Pacific Copper, which is a consortium of Nippon, 66%, and Mitsui. So we've got a big global copper partner on a gold project in PNG. Our strategy is very simple. Our focus is to extend the current resource at depth and along strike, and then identify new satellite projects to bring into production. The history, I'll just run through this. There's 130, 140 years of mining history on Misima. Gold was discovered there at the turn of the century. There were previous high-grade undergrounds, 9-10 gram ore bodies. They were all pre-World War II. And then Placer and actually CRA originally in the 60s and 70s drilled out the ore body that was mined in the late 80s and 90s. We are looking at extensions at depth of that ore body. It was a special mining lease. It's now an exploration licence, so all approvals will have to be a process that needs to be go through over the next few years. Some data which, as a mining engineer, gets me very excited. Let me go back. You can see it averaged 230,000 ounces per annum for 14 years. Peak production, 374,000 ounces. In fact, the first 7 years of production at Missima were all over 300,000 ounces per annum. And like I said earlier, average costs of $218 US for the 14 years of operation. Why did they close it? Because gold was under $300 an ounce in 1999. So that's what happened. On top of all the gold, and I haven't really spoken about this, is the silver production. In addition to 3.7 million ounces, Placer produced 22 million ounces of silver as well. What do we have? I've already spoken about the lease, the resource, but on top of that we have all Placer's data. We've got the geological data, but the mining data, the monthly mine reports, the 1986 feasibility report, the engineering drawings for the mill. All of these are key assets to help progress this project back into production. PNG, as we've spoken about, or we're speaking about, and Patrick mentioned, is elephant country. But on top of that, there are 6 producing large-scale projects. I think you're going to hear about number 7 shortly with Ron, which is fantastic. And hopefully will be the next one after that at some point. But the beautiful thing is about PNG, it has a very stable regulatory system. The mines regs are based on Australian system and standards and have been in place for a long time. I mentioned earlier that Missima was a special mining lease. It was special mining lease number 1 under the current regulation system. So that was in 1986. So we're very happy to be there, and as I said, it's an exciting part of the world. The Missima residents or locals, we call them a Polynesian culture, and that's really quite important to understand the difference between the island approach to life and to the highlands. It can be misunderstood at times about some of the issues that happen in PNG, but I can assure you now at Missima it's a very different approach. It's almost Fijian style and culture and very relaxed. On top of that, we have a trained workforce. Our excavator operator who's clearing our drill pads today worked for Placer Dome in the late 80s and early 90s and is a Missima resident. Over 100 Missima residents today do fly in, fly out to Lahire, Oktedi and Porgera. They're the main 3 projects. They were all Placer Dome employees, work at this project and want this project back. So that's all going to help us. In terms of infrastructure, the mill's gone, but there's a lot of stuff to leverage off in terms of airports, hospitals, schools, accommodation. Placer built all those assets in the late 80s and the 90s, and they're obviously all still there today. Historical mining was a very low strip and actually a very low cost project. The highest point on the island for us is 400 metres, and that's obviously all very favourable for a low cost production. Metallurgy, it was also very low cost in terms of the processing because of the low, basically what we talked about, Patrick talked about with being young rock. It's very soft, so very low cost to process. In fact, Missima in the 90s was classed as one of the lowest cost processing projects in the region. We're obviously drilling now, and I've spoken there, that was a bit of a mean feat to get the drill rig there in 6 months from taking over the company, but we achieved it. So we're very excited to be in that position. The plan is to do 10,000 metres of diamond drilling this calendar year, and obviously that'll all start to, or let's say assays are pending, they'll be over the next few months. And as I mentioned earlier, in our first month of working, basically field work, we've discovered a new area called Ginamawa. Now, why that's interesting is that it was a very high-grade structure. And the most fascinating fact is it's right next to where the old mill was. In fact, the haul road goes across the top of this discovery. So Ginamawa is a new work area, and as you can see, we got 14 metres at 12 grams per tonne in a trench, and on top of the 12 grams is obviously 35 grams of silver. So all the oxides at Missima are quite high grade in silver. So as we continue to explore, we hope to see the silver grades come up in our resource. Interestingly, 400 metres, oops, I keep getting that wrong, 400 metres to the north, we've got 20 gram assays. There's artisanal workers here. All of this needs to be followed up. This light grey area was where the mill was. That there is the haul road. So fantastic to have early stage success, and this is now one of our prospects to drill over the next year. Where are we drilling initially? Stage 1 drilling or phase 1 drilling is going to focus on extending this resource. This here is the old pit, which you actually can't see the old pit shell, but it's in there. That is the optimised shell for the 43101 that the Canadian company did. And you can see the orange outline is our JORC resource. All drilling constrained. So everywhere there's a drill hole, our resource chases this down. We're focusing on drilling and extending a resource in the southern section. Those blue circles line up with those two areas there. We're also going to step out to the east and start drilling on new prospects. Bit of exploration. I've spoken a fair bit about the mining history, but let's talk about what's in the future. This is the old Yamuna pit, 3.5 kilometres long. 2.6 million ounces of our resource sits in that today. 200,000 ounces sits over here at Iwationa, these satellite pits, which in itself is a very interesting story. I will touch on it for a minute. They've discovered those 3 pits looking for road base that they were trying to sheet the roads with. So they were chasing barren rock and discovered 1.5 2 gram dirt. So that's one of our obviously exploration target areas. But the main structures where all the ounces sit today, it's open for 4 kilometres to the north, it's open to the south, open to the east. And I'll talk about all those areas in a minute. And on top of the north, we also have evidence that there's a significant target on the east side in the north. So we've got Missima North, Missima Northeast, Yamuna, Yamuna East, Quartz Mountain. So there are our prospects. And you can see our new discovery here, Ginamawa, sits right down next to where the mill was. You can see this is where the mine camp was. This is where the current airstrip, shallow port, deep water port. A bit of detail about what is in the resource today. You can see this is the ore body, the main structure, the Yamuna fault. They are 40 to 50 metre intersections at 2 to 3 grams, and that drives the resource shell down on $1,000, $1,200 and $1,400 gold price, US dollar gold price. You can see it's a big, wide open ore body. Continues at depth, and what's interesting, the early stage structural work is indicating this ore body is as deep as it is long, and we're already talking about a 3.5 kilometre ore body. Now, we're not talking about drilling that deep at this point, but it does indicate that at some point down the road there's potential underground potential to this open pit project. Another example of the structures we have today, this is a Tonawak structure that's called the Yamuna Fault. This is the Tonawak structure. This is actually one of the splays on the east, and that was actually a very high-grade discovery by Placer, and that's what they've left behind for us today. There's some great numbers in there, 16 metres and 20 metres at decent intersections. The north, as I've spoken about, is 4 kilometres of untested Yamuna Fault. We need to do a lot of exploration work to re-establish the area. We've got a lot of field work to do. But you can see here, this is a heat map of trenches we currently have. Red is 4 grams. So some of these areas are significant in scale, and the fault sits through there, which we believe is largely untested. The general thought at the moment is that that is supergene oxides, and we've still to drill the fault. You can see some of the great numbers. Trenches 100 metres long at 1.6, 100 metres at 1.1. Drill holes 8 at 4, 10 at 12, 2, 10 at 3. These are 1.4 and 2.3 kilometres north of where the pit finished. And on top of all that, there was an old underground in there. We've got one data point of 16 metres at 21 grams. That underground sits somewhere in that area there. We actually haven't been able to find it because it was from the 20s and it's been obviously covered over many years ago. So this is the east side, more of the geology and why we're excited about the east. What I will say, I won't spend a lot of time here, but the pink dots and the pink triangles are all 2 gram into soil samples at surface. You can see the anomalies we have, these yellow polygons for the want of a better word, and some underground adits out here right out to the east. That's 3 kilometres away from the current pit. All these areas need following up. Trench samples of 20 metres at 4, 16 at 1, 40 at 1.95. These structures are all got a name, and we haven't named them because there's so many of them. This is an example of one of the artisanal miners mining on the structure. I actually took that photo in August last year. You can see that's a picture of a person here. That coincides with up there. There's where the hut where they're sleeping. These are the trees on the hill. This is 50 to 60 metres high. That's, we think, the hanging wall structure on one of the splays. So obviously it must be decent grade for them to be mining like that, and one of our priority targets. Quartz Mountain is our fourth area I mentioned, which is the area next to the mill, and that's the one I was talking about where they went looking for road base and found gold. As you can see, lots of assays through here, all need following up. I'm running out of time here, so I'll move along. Our current resource, 80 million tonnes at 1.1 grams per tonne. Just to give you a feel for how that compares to Placer Days, they had 77 million tonnes at 1.2 when they built the project. So we've got as many ounces in resource today as they had when they started. Various cut-off grades you can see there at half gram, that's our current resource. At 0.7, we've got 50 million tonnes at 1.4, and depending on which way you want to go, you could go to 150 million tonnes there at 0.3. So there's a lot of gold here. Just where are we at in the timeline and our current strategy? Obviously, we completed the deal in November, so we had a busy few months there. The drill rig is now on site and underway. We'll complete the earn-in next quarter, and we'll get into phase 2 drilling. There is actually no difference between phase 1 and phase 2 drilling other than we will complete the earn-in, at which point our partners will either need to make a funding decision, which they're saying they will, or they will dilute down. On the current plans, if they don't fund, we'll be at 75% of the project by Christmas. Both results are a good outcome for shareholders. I'll touch base quickly on Australia. We've got a number of projects here. We sort of started with these assets. We've got the lithium projects, and mainly in the Northern Territory. We've got three drill targets in Bino and 2 in the Arunta. Those assets are currently what we class as now non-core, and we're looking at strategies around that as we speak. But Livingstone remains very important, and we think this is a feeder project or a stepping stone into Missima. We've just completed a large drill program over that, and assays are pending. Valuation, we're trading at about $10 per ounce, as you can see down here, and we've got a very large resource base set to grow. And I'll finish there and just wrap it up, and what I'd like to say is that Missima people, we're getting benefits today of the historical mine. We can see that on the ground with the experience, the education, the hospitals, and hopefully when we rebuild this project, the next generation will get the same benefit. Thank you.